Well, November was a bumpy ride for global share markets. It was a chaotic month full of ups and downs, but ultimately, the Aussie market finished November 3% lower, the worst monthly performance since March, but this is after halving its losses from earlier in the month when our local market briefly hit a 6-month low. The US market did better, ending the month pretty much flat, up by just 0.1%, rebounding from its near 5% drop earlier in the month, which was just enough to log a 7th straight month of gains. Now, there were several factors at play. Early in the month, there were concerns about lofty AI valuations, worries about the path for US interest rates, and the longest US government shutdown finally came to an end after 43 days around mid-month, which delayed a lot of key economic data and made investors even more nervous about upcoming rate decisions. In Australia, a number of hotter than expected data prints have led investors to believe rate cuts are off the table, with some predictions of a possible rate hike by the end of 2026. In the US, however, optimism has been growing for a December 10 rate cut, which propelled the US share market late in the month and seemed to have overshadowed the AI valuation concerns. As far as Aussie sectors go, healthcare led the gains, followed closely by consumer staples and materials. Industrials also eked out a small gain of 0.1%. But on the other end, 7 sectors lost ground, with tech falling most. In terms of stocks in focus for Australia, gaming giant Light & Wonder jumped most after solid earnings results and after an investment firm upped its stake in the company, while lithium miners including Pilbara and Liontown continued to benefit from the upbeat outlook for lithium prices and increased demand for lithium after several challenging years. Now, in terms of some of the losers, Technology One was one of the drags in the tech space after its full-year results missed analyst estimates, despite posting record profit and revenue results. Temple & Webster lost ground after reporting softer than expected sales growth, and DroneShield had a very rough month, down almost 50% amid a series of mishaps for the company in recent weeks, including its CEO selling nearly $50 million worth of his shares. Turning our attention to the US, the top traded US stocks by CommSec customers on the international trading platform last month were Tesla, Nvidia, and Palantir Technologies was in third place. The best performing US stock over the month was Albemarle, the world's largest lithium producer, amid the upbeat lithium outlook, and Eli Lilly became the first company outside of the tech giants to be valued at $1 trillion after striking a deal with the Trump administration to slash weight loss drug prices. On the other end, Supermicro Computer did worse following weak quarterly results due to delayed AI server shipments for a large customer, and DoorDash missed on profit expectations. Looking ahead from here, the Reserve Bank will make its final interest rate decision of the year on December 9th, which is likely to be a non-event as investors are widely expecting rates to remain on hold. However, comments about the outlook for interest rates from Michelle Bullock will be very important. On December 10, the US Federal Reserve is widely expected to cut rates by 25 basis points, and it's the final month of the year. The performance across global markets this month will determine how we wrap up the year. Now, keep in mind, trading volumes tend to wind down just before Christmas and don't usually pick up again until mid-January. So let's see if we can get a Santa rally this December.